Hello everyone. Today we are going to take a look on asset depreciation. In our previous video we added actually two assets to our fixed assets ledger. One was a truck for 7,000 and one trailer for 1,000. In order to figure out what expenses to capitalize to assets values and what the entry should be, we need to know property, plant and equipment accounting guidance. So we capitalize acquisition costs, we capitalize costs to bring asset to the operating condition, any capital repairs, any repairs which increase the productivity of the assets or useful life of the assets. All of that should be capitalized. And when we put the assets on the balance sheet and we start using it, it's time to depreciate it. Now, the depreciation I'm showing you here is accounting depreciation or financial accounting depreciation. It is different from the tax depreciation. For financial accounting depreciation, we also need to know the guidance. And I provided some guidance on property, plant and equipment in one of my lectures. But in order to depreciate the asset properly, we need to know acquisition cost, which we know from previous lecture. We also need to know a useful life and a salvage value. Both useful life and salvage value will require your judgment and your knowledge of business and your knowledge of market for the used stuff. So here we just use simple example. We determine that useful life is 60 months and salvage value of a truck is $1,000 and trailer doesn't have a salvage value. So we calculated depreciation expense, but in order to do so in an organized manner, we need to keep some form of the asset ledger, a fixed asset register. Here I organize it in the vertical format with dates here, and currently we are in November 2021. So I start with useful life. I added acquisition cost, salvage value. I calculated depreciable cost, so it will be 6,000 for truck and 1,000 for trailer. And I did a formula for accumulated depreciation, and I calculated depreciation. You can note that I rounded items just to save some time on retyping cents. I don't see any value to use cents in assets, in financial asset depreciation. I will just use somewhat less, $1 less in the last months of the depreciation. Won't impact really anything. So let's enter these numbers into our QuickBooks. So let's take a look at our balance sheet. So here we have the items, and let's take a look at profit and loss statement. No depreciation expense. So I do depreciation expense through journal entry. I don't know any other way to do that. So journal entry should be fine. So we need to debit depreciation expense. So if you do not have depreciation expense account, you can add one. You can select cost of goods sold. Actually, probably other cost of services and just call it depreciation. But I've already got one, so I don't need to do that. I created it the same way. And so our total depreciation is an expense, so it increases by debit. And I use accumulated depreciation account. One, I've already added one. And for the next one, I need to add it as well. Fixed assets, accumulated depreciation, trailer. And that will be 17 and that will be 100. Okay, so basically that's all, and all I wanted to do is to adjust it back to November, save. Okay, let's go check. So our profit and loss shows $117 in depreciation expense. Our balance sheet shows accumulated depreciation for truck and trailer as expected. So that was all you need to know about posting depreciation expense in QuickBooks. The most difficult part is knowing accounting guidance and applying it properly to capitalize the right amounts. But that's covered in my lectures. Thank you. Have a great day. Bye bye.